Hey, 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 everybody. Welcome back to another episode of the Real Deal Pod with Allister and Geoff. It is episode 38, and we are coming to you on a Friday. Yes, we're a couple of days late, but yeah, never too late. We're coming out on a happy Friday. It's an amazing, amazing day. Geoff, my man, I'm here with my main man, Geoff Lee. Geoff, how are you doing?
I'm doing well. My body's a little sore. Went up to Whistler yesterday. No, we're on Thursday. What day are we in?
We're on Friday.
Yeah,
This is the
what?
reason why we're 2 days late because you were out skiing while I was out working.
Yeah, yes. Went in time just flies on by. It's insane. But yeah,
Right?
no, went and hit up Whistler. This is what I gotta say about anybody that skis Whistler. Number one, it's super duper expensive. So get your Epic passes or get your
Yeah.
your your annual passes or
You're
your
talking
edge
about that
card. They
last
call
week.
it edge cards.
Yeah.
But if you order certain edge cards or you get certain edge cards, I believe by April, you get actually ski for free up until December 13th.
Nice. That's
Yeah, I
crazy.
I did not know that. I bought my edge card in October, so I wasn't skiing for free, but for next year, I'm doing an early auto renewal. So
That's awesome. That's
yeah,
awesome. Now, there was a picture that I saw, Geoff, of you
yeah.
um, hanging out with a cyber truck.
Yeah. No,
Yeah.
I do not own
How'd
a
you like
side
it?
truck. But many people believed I did own a Cybertruck, but no, I do not own a Cybertruck. It was a friend of mine's brother, and he had it for a week. And yeah, we headed up in the Cybertruck up to Whistler, and yeah, that thing definitely is a head turner for sure.
I got to tell you, in all honesty, I'm not a fan. I see, for me, it looks too much like a space vehicle.
Yeah.
And I don't think I suit it. So I saw one, I think I saw one on Tuesday, and I parked beside it, and I looked at it, and I'm like, can I drive that? I'm like, man, I don't have the look for a Cybertruck. First off, I don't really have the look for a truck, and that was really tough growing up in Winnipeg, right? Because everybody owns truck. I don't have the look of a truck guy.
Well, who that's you saying that. Let's take a picture
Could
beside a
you
truck.
see me behind the wheel of a truck, Geoff? Come on, man. Really? Do I
Yeah,
look like
why
a truck
not?
guy? I feel like I know I suit an SUV. I had one before because I do purchase my vehicles on look, right? On how I look behind the wheel. So I know I can fit an SUV. Truck, I feel like I'm trying to be something I'm not, even though I am down home prairie. Like I love being out in the dirt and at the lake and all that sort of stuff. And,
Yeah.
not in the confines of suburbia, but yeah, I just don't pull off the truck, man.
Yeah,
I
I
don't know.
have a Colorado ZR2, and I don't know if I suit a truck either, but I go for it. It's the pavement princess is what they're called. So I don't think it will ever see a dirt road, but you know what? It's equipped when that time happens.
I love it. Well, man, while you were out skiing, I was out working. I had actually a great couple days. Was able, with my clients and I were able to come to an agreement on their wonderful listing with a couple of first time buyers. So it was wonderful. Got to meet those buyers throughout the process. They're a super great couple. So we're very, very excited to be in the process of them completing on their journey. So that was really fun. And then, man, Geoff, I picked up two of the sweetest clients on Wednesday, actually, when you ditched me. I actually was out before, so I was gonna message you saying I'm gonna be late for the pod. I'm just out with some clients. Picked up the sweetest clients. They're downsizing. They currently live in Port Moody. They are the most amazing couple. I had so much fun. So that was my win on Wednesday. So I've had a pretty good week.
Yeah, so yeah, that's awesome. That's awesome.
Right. Yeah, man. So let's get into it. It's time to get into podcast's hottest new segment. Geoff, did you hear? And if it's not podcast's hottest new segment, we're going to make it.
I think so. I
Yeah,
think
right?
no,
So,
I did
Geoff,
not hear. So
so Geoff,
hit me with
let
it.
hit you. Geoff, did you hear? The BC real estate workforce is about to feel the heat. A new report is actually saying our province will need over 89,000 new workers every year to keep up with retirements, aging, and the surge in housing demand. So that's not just a number. That's a wake up call. So what I wanted to do for this segment was unpack what this is going to mean for the industry and what's really at stake if we don't step it up. So this report was titled Demography and Demand, the changing context for real estate occupations in British Columbia. And what it did was it painted a clear picture that by 2041, BC's population is expected to grow by 42%,
Oh, wow.
adding over 2.1 million people. So that's what, 16 years away now, guys. So that means we're looking at a demand for over 1 million new housing units in the next 20 years.
Yeah.
But the kicker is our workforce isn't keeping up. So in real estate conveyance, nearly 18,000 workers will be needed every year. And in real estate development, over 71,000 new workers annually. So what's causing this is aging professionals, low birth rates, and then our younger folk moving away. That's what's actually starting to cause this problem. So I wanted to know, Geoff, what is your take? Are we looking at a labor crisis, or are we looking at a possible, spot of opportunity? Because I always say where there's chaos, there's opportunity. So is there some opportunity in this?
Well, when I hear that, and this is the first time that I've heard it, so it really is, did you know? But my first reaction is that if there's going to be job opportunity, why are one of my kids still unemployed? That's the
There you
first
go.
thing that comes to my brain.
Right.
But I also think that there's immigration laws that are being rolled out, and the one thing with that also could handcuff that 89,000 people being employed because I don't know. I don't want to throw everybody under the bus, but a lot of people don't want to work construction. They do not want to
Yep.
work that nature of a job, whereas immigration allows a lot of people to jump into those types of employment, right?
Right. Mm-hmm.
Um, so yeah, that's my first reaction is like, geez, that's a lot of job creation here, 89,000 jobs being created that need to be fulfilled. We shouldn't be having an unemployment issue. We're going to have a labor shortage, right?
Right. Yep. That's what
And
I
then the
was taking
next,
away from it too.
yeah, and then the next part of me is like, geez, we're going to have, and this just kind of talks about what we've talked about before as far as a housing crisis and not having enough houses to basically handle this immigration that's coming in and this population growth, right? And I think the government is recognizing that, and that light bulb is coming on, but really, is it going to be enough to really do what it needs to do? And the answer to that is no, right? You can put all the new guidelines, all the new policy, all the new regulation, all the new procedures, but at the end of the day, if you don't have the ability to basically, to make the housing,
Mm-hmm.
how are you going to create the housing, right?
That's it. No, no, and that's a great point because one of the things that the report highlighted was the need for collaboration across government and educational institutions and industry leaders to keep the sector resilient. So it's really not just about filling job vacancies; it's going to be about future proofing the industry. Really,
Yeah.
like if we don't adapt now, we risk falling short on housing supply, which could ripple into affordability and economic challenges. So like I don't know what's the first step that we need to take.
Well, and again, thinking out loud, if we're having a housing supply, that what does that do to housing pricing, right? If
Right.
you have a demand and you have a shortage, again, what happens to pricing? It
And
goes
we
up.
don't have the people filling that sector in order to work through the developments, right? Because part of that development, right, in the 71,000 people that they need annually, that is people working those construction jobs that we're not, we don't see that them being filled.
Yeah.
Yeah.
Kind of reminds me a little bit of when the there was some labor shortage up, I think it was up north, and people that were working in 7-Eleven were making, and again, I'm just kind of paraphrasing, were making 35, 40
Hmm.
dollars an hour, right? So
Yeah.
is that what it's going to come to? I don't know, but it's definitely something that needs to be addressed. And yeah, if there is going to be a labor shortage of 89,000 people, and we have a population growth and then a housing shortage, that doesn't sound too sexy.
No, it doesn't at all. It doesn't at all. So, like, I think, like, here's the bottom line: our sector's success really depends on skilled, prepared, and a sustainable workforce. So whether it's creating an efficient process or leveraging technology or collaborating across sectors, the work we do today will shape how we meet the housing demand tomorrow. And let's not forget that the stakes are high. Housing shortage doesn't just affect buyers and sellers; it impacts every layer of our economy and community.
Yeah.
Yeah,
Yeah. Interesting.
yeah.
Interesting.
Do you have any strategies that you think could work to move the needle?
Hmm. Again, I think we have issues with labor because certain people do not want to work certain
Yeah,
jobs.
yeah,
Certain people want to basically make a king's ransom, but don't want to start off in an entry level, right? There's
yeah,
that entitlement. Um, and again, I think that a lot of times, the one thing that immigration does serve is that labor shortage, right?
yeah.
But then you have all the other issues of what that also brings. So again, I think people just need to readjust. I think people just need to understand that, now I'm going off on a rabbit hole, is that there is no reason for an individual to be unemployed. If
No,
you are healthy and solid and where you need to be, right?
yeah,
There is no need for that. There is definitely going to be a housing crisis. We have a
yep,
population growth and we can't house them. We're seeing that now, right? This is where we're seeing those new guidelines with the elimination of Airbnbs and trying to stimulate long-term rentals. This is where we're seeing the government stepping in and saying, hey, if you refinance your house, we can refinance it to 95%. Only if you're going to be putting in a rental component to your home, right?
yeah.
So they're trying to do these initiatives, but is it really going to be enough? I don't think so, because I think if you have a labor shortage, how are you going to build, right?
Right. And that's so that at the end of the day, I think that that's what it is that the pipeline for new talent is critical, right? But it's not going to be just about getting people into the industry. It's going to be more so about ensuring that they're prepared. So that's going to mean training programs that equip them with skills for both conveyance and development. But I think it's also a bigger opportunity to rethink how we're going to attract younger talent, right? Because let's face it, real estate isn't exactly seen as cutting edge, right? Like we talked about it last pod, how we're always so hesitant to adopt and adapt to new technology, right? So we have to really focus on how do we change that perception, and we have to focus on building that pipeline of new talent. That's my thought.
Yeah.
Yeah.
Well,
Yeah, man. Crazy, right?
let's see how we're gonna do that.
Right. But so quickly before because I know though you've got some stuff you want to talk about, but I feel that we should pause and quickly touch on the November market update
Let's do
because
it.
we had the numbers come in. So I'm just going to run it down super, super, super quick. So we saw again a seasonal slowdown in November. We fell below October's surge. In terms of sales, we recorded 1,136 sales across the Fraser Valley. So Vancouver's numbers I don't have right now, which was down 15% from October, but that was actually higher by 28% versus last year. Um, seasonal buying trends contributed to the decline. though sales remain stronger through the past 2 Novembers, reflecting that we have growing buyer confidence, active listings dropped 8% to 8,125, right?
Mm.
But we're still at a 10-year seasonal high, which is 30% above November 2023 in our
Okay.
active listings, right? So that's just showing, again, our active listings are still staying quite high above last year. And it's just, seasonal trends going down.
So there's still a lot of supply, is what I'm
Still a
hearing.
lot of supply available. We're still in a ratio of a balanced market of 14%. And new listings fell by 26%, right? So we didn't even have any new listings really come to the market.
Right.
Yeah.
So kind of
Uh,
what I'm hearing, and I'm just kind of paraphrasing. So based on our October's market, we actually saw a 30% gain over the year before, but basically maintained its 10-year average.
10-year average. We're just in the normal now November
Right.
Christmas slowdown. So
So
that's why,
come
there's nothing
November
really
now,
exciting.
come November now, we are seeing the market dip
Yeah,
over October, but again, is basically reflecting the same numbers of November for the past 2 or 3 years,
exactly.
right?
Yeah. Yeah.
And then to
So,
sum it up, I want to see how well you explain this just so I can understand it in
I was
layman's
going to sum it
terms.
up for you right away.
And to sum it up, though, is that it's still lots of inventory on the market,
Yep.
but housing listings have also come down, right? So
Yep.
that's
So
Geoff Lee's Cole's notes.
Jeff
Let's
Lee,
give it to
Jeff Lee.
Alistair's
So
in
that,
simple
yeah,
terms.
let's Cole's notes. Jeff Lee's Cole's notes. So sales were down 15% from October, but higher than last year's November. We have active listings dropped down by 8%, but they're still higher than the 10-year norm. We have listings that fell 26%, but again, higher than our 10-year average. And we're in a balanced market of 14%. That's the Coles notes. That's the easy to listen to version. Days on market, really stable, 36 days. Actually, single family went to 43 days, though. That went up a little bit. But our
That's the
townhomes
average
and
days on the market before it
days on
sells.
market is 43 days. So that increased in single family. Townhomes and condos really stayed the average of a month, 30 days.
Well, I want to touch on that, and I want
Yep.
to touch on that to people who are listening to our pod that might have their properties on sale. Is
Yeah.
understand, and again, Alistair, you remind me what those are. Understand that if your home is on the market longer than these average time frames, your home is not priced right to sell.
It is not priced right. It is not looking right. The realtor is not marketing it appropriately. You are not having enough conversations with your realtor to understand why that property is sitting on the market for that long. Because no, if your market is priced right, if your market is presented in a way that's shown to sell, then it should only take 30 days. I mean, we just did that with my client with the property that I had listed for my clients in North Wallet, right? Priced it right. And it took us 30 days to sell it.
Well,
31 actually. Yeah.
and I think it's also to share a story. I know of another condo that was priced high,
Mm-hmm.
sat on the market for, I'm going to say, well over 30 plus days.
Yep.
No showings, no nothing.
Yep.
That condo got relisted. I'm going to say that got relisted from what it was to the new pricing, and all of a sudden, magically, they're getting showings. All of a sudden,
Exactly.
magically, there's offers that are being put in.
Yeah. And
Magically, all of a sudden, you have an accepted offer, and that property has moved. But again,
now,
what is the difference? Really, obviously, was the pricing and setting the
exactly.
expectation, right? So,
Right. And so what I want to defend, sometimes people will look at that and say that's a realtor not doing their job, right? What I will say is there's a lot of times that clients are very, very hopeful when I coach them, and optimistic in what they feel they should be getting for their homes, and don't really want to listen to what the market is telling them. And it normally takes that that having to eat the crow from that first realtor, right? But being afraid to deal with that first realtor because they don't want to eat that crow in front of them. and then going with that second realtor and saying, okay, we know that this is what it has to be at, and then repricing at that price with that other realtor. Right.
Yeah.
So let's be balanced in saying both parties need to be able to have that open and honest conversation and really be willing to listen to the hard truths of what the market is telling us. Because we all want to hear the market when it's telling us great things, but we never want to hear it when it's telling us poor things. Right. Let's just all be able to understand that the market is going to be the one that tells us what our property is going to sell for, good or bad.
Yeah. So again,
Right.
average time on the
Days on
market for a
market,
condo.
43s for single family home, 36 for a townhome, and 33 for a condo if we're being specific.
Right. Right. So
Yeah.
again, folks,
Yeah.
if your properties that are on the market are on there for longer, we'll just dumb it down to 30 days.
Yeah.
You might be priced inappropriately.
You gotta rethink about your strategy, really. And that's really, and I always said in all cases, if your property hasn't sold in 30 days, it's really your strategy.
Yeah.
I believe in pretty much any market. Well, the seller's market, of course, is completely different. Things can sell in a day. But when you're in a balance to a buyer's market, really, if you're positioned properly and you're priced right, you should never be spending longer than 30 days on the sale of your home.
Yeah. I think a lot of us live in yesterday as well, and we want to believe that we're going to be in that seller's market or think we're
Yeah,
in that seller's market. And if we purchased a home or sold a home in those COVID years where it was just insane, sometimes we live in that, and to your point, we need to eat our crow to say, hey, like, you know
it
what?
is.
The market dictates your price, unfortunately, right?
COVID screwed up our perception for a very long time. Has screwed up our perception of the market for a very long time. We've had a hard time readjusting. We forgot what 2018 looked like. Right? That's how bad to that 2 years of COVID really screwed up our perception, because the 2 years prior to COVID was what it was like now. So if we just erased COVID and put in a normal market, we would no longer have a distorted view of how the market progresses or
We still may have a
transitions.
distorted, we still may have a
Yeah,
distorted view,
it
but
just wouldn't be as distorted, as crazy.
yeah, yeah.
Yeah, yeah, man. So what's on your plate? What did you want to talk to us about today? I'm stealing all the time, man.
Hey, I wanted to share a story about a file that I worked on, and I think this is going to be relatable to you, Alistair. And I think it's going to be relatable to probably 30% of the population that's out there. And it's all about being self-employed and trying to get financing,
Mm-hmm.
right?
Yeah. That's the story for everybody. Because I think you mentioned it last pod, but what is the number now for self-employed, pardon me, individuals?
You know what? We should do a really good quick Google fact on it. Maybe you can do that as I'm babbling along
Yeah, you go
here.
ahead.
But I
I'll Google
believe
check it.
I think it's 22 to 33% Canadians are self-employed, either as a sole proprietor, as an incorporated business owner, and I believe it's 3 out of 10 Canadians.
Okay,
Let me see if I'm right.
I will.
The drum roll is going. But as you're checking that, what I wanted to share really is understanding that being self-employed, the whole idea about being self-employed is not reporting a lot of income. And the reason why, Alistair, is because you don't want to pay a lot of.
Taxes, baby.
Right. So
Yeah,
did you get that? Did you get the fact check?
I do. So right now it says in 2023, an average of 2,652,600 people were self-employed, making up 13.2% of the employed population.
Okay. So
That was taken
basically,
from a study in 2023.
right.
That's
So
crazy.
13.
Yeah, that's still though a large amount of people, especially for Canada, because we have a different, as I say, value system than the United States. We've been with, like, Canadians have always been very much government focused. So we pride ourselves on having jobs with pensions and all of that sort of stuff. Where it's our U.S. counterparts that have always been the entrepreneurs, and
Yeah.
right, and you go to the United States to build yourself. So that's a lot. That's a large number. And knowing that we're creeping up,
Yeah.
that number is creeping up higher and higher. That's
I
another
had
eye opener for me.
22% of Canada's population, and then I started second guessing myself. But again, 13.2% of us are self-employed.
Huge,
So
huge.
here's the thing: being self-employed, being a sole proprietor or an incorporated business owner, the whole idea about being self-employed is having a great business and not reporting a lot of income as a tax strategy. And here's the thing, and we talked about this, every $28,500 that you report to Revenue Canada means you could borrow 100,000.
Thousand, yeah,
And then every $400 payment you have takes away 100,000. And every $13,000 of debt you have, either in a line of credit or a credit card, takes away 100,000. So imagine that you're a self-employed person, and you're reporting, I'm going to even say 90,000, which is probably high for a lot of
that's high.
self-employed people.
Yeah,
That means you can only qualify for a $300,000 borrowing power. Now
yeah,
you throw a car payment in there, that's $600. That takes away 150,000 from your borrowing power. And maybe you got some debt in there too that takes away your borrowing power. Now, at the end of the day, now you can't borrow nothing based on
yeah,
what you're reporting to Revenue Canada, right?
yeah.
So how do self-employed people do it, Alistair?
Well, you tell me, Jeff. I don't know if I do it right.
Well,
I'm gonna based on this conversation that we have. I am going to my accountant and my advisor to have a discussion with them on their performance.
and your accountant is going to tell you, Alistair, do you want to pay a large amount of tax and report
No,
more income?
are you crazy?
Or,
I like to look poor,
right,
and like I have no money. I wear clothes with holes in them and patches and
that's not
stuff
true.
like that. So,
That's not true.
but
So again,
no,
folks,
Jeff, I would
there
like
are
to
three
on
ways.
paper, on paper, on paper. I like to make a modest salary.
Right. And
Yeah.
again, I think the average family income, and again, we can Google check this because I'm paraphrasing. I think the average family income is 82,
44. Well, no, 82. Sorry, 44 for a
80,
single
about
person.
82,000. So again,
Yeah.
even as a self-employed person, you use $90,000. That only allows you to borrow 300 grand if you have absolutely no debt, right?
Yeah.
So how do self-employed people do it that have a great business, that basically aren't reporting a lot of income because it's a tax strategy? There's three ways, Alistair, and then I'm going to share a story of a file that we just worked on.
Okay.
So the first way is basically, what have you been reporting to Revenue Canada for the last 2 years? And we're going to qualify on how much you can borrow based on what you've been reporting to Revenue Canada minus the debt load that you have, is going to basically determine what you're going to be able to borrow. So that's the first way, right? That's the way everybody is going to do it. That's the way your bank's going to do it. That's the way your credit bureaus are going to do, or sorry, your credit unions are going to do it. That's the way your broker
That's
might do it. But
right.
here's the thing, folks, when you are self-employed, there are mortgage products and mortgage vehicles out there where you can state income. And we've talked about
Right.
this on and past pods. You can state the income based on what you've been reporting to on your
Right.
notice of assessment.
Yeah.
And you can increase that. You can state income based on your gross business revenues. What are your gross business revenues for the last 12 months? And you can state income based on those two things. And then as a result, maybe you're reporting 90,000, but your gross business revenues allow you to state your income to be 200,000, as crazy as that sounds, right? Now,
Yeah.
all of a sudden, you are able to purchase what you're able to do because you're stating income to qualify, right?
Yeah.
Now, state an income to qualify with a bank or a credit union is not as easy to state income with, say, a subprime or a B lender, because when you state income with a bank or a credit union, they're going to take a look at your notice of assessments and say your notice of assessment, say $90,000, and you need to state $200,000 to make the file work for the amount you want to borrow. Most banks and credit unions are going to say, nah, that's not going to work for us.
Right.
Right. And this is where we then will take that. Okay, well, you're only reporting 90, but we need to basically state 200. Now we're going to take a look at the gross business revenues and possibly shift our gears and go to a B lender or something to that nature. Right.
Right. Now, why are B lenders so less trusting?
So less trusting.
Yeah.
I don't think they're less trusting. I think they take a look at the gross business revenues. They take a look at the business expenses. They take a look at the
I
what
guess
we call
I
the
use
debt
the wrong, yeah.
servicing.
So I use the wrong terminology and less trusting. I believe
More
it's
flexible.
more understanding.
They're more flexible,
It's more
right?
flexible and more understanding. They look at the broader picture as a whole, right? I think
Yes.
they have, yeah, yeah. So less
And
trusting was a bad word. That was a
yes,
poor choice of words.
that's a poor
Yeah,
choice.
they look at the broader picture as a whole.
And they're a little bit more adverse to the risk, right?
Right. Yeah.
So, but do keep in mind when you have to state income to say with a B lender, you're usually paying an interest rate 1 to 2% higher, right?
Yeah.
And then typically you're having a 1 to 2% fee of the of the loan amount, at time of origination.
Right.
So the other way again is to say, now here's the other way is taking a look at financial statements, right? Taking a look at the net income after tax or the retained earnings. And this is where I want to kind of wrap it up and just to share a story. So we were working on a file. This gentleman was an incorporated business owner. He was reporting $60,000 of income, and he had an existing mortgage of about 350,000. Sorry, he had about $90,000 of income. He had an existing mortgage of 350,000, and he wanted to get a line of credit, the maximum line of credit that he could, um, in order for reinvestment. So taking a look at the file, and again, the first way you always do the file is you take a look, okay, well, what are you reporting to Revenue Canada? Well, I'm reporting 90,000. What are your debts? And he had a car loan of, I think it was like $600. But that car loan was being paid through his business. The vehicle was registered in his business. So again, we had the ability to wash it out. It didn't impact his borrowing amount. And this particular gentleman actually paid off his credit cards each and every month, right? So based on a $90,000 of income, that means he could borrow 300 grand. He had a $600 car payment. And again, most people will say, well, that means that's going to take away 150,000. So you got the ability to borrow 150 grand, but you got a $350,000 mortgage. We're not even going to be able to do this, right? Let alone, you're not even going to be able to requalify for your mortgage, let alone, get you this line of credit.
Yeah.
So this is again, folks, is where you need then to ask the question, well, how is your car being paid? Is it being paid through your company account? Is it being registered in your company name? Right.
Right.
In
Yeah.
this particular case, we could show it, and then all of a sudden increase his purchase power to 300,000 again, right? Because
Yeah.
it was a business debt, not a personal debt. And
Not a personal debt.
the reason why I share that is most people aren't going to think or ask that question, well, where is this debt being paid and how is it registered when you're a business owner, right?
Right. Yeah. But I've always felt though too,
So
is it really, and then just to pause, and I'll let you go on. I never feel like a lot of these questions should be the client asking, because they're not, a lot of times they're not going to know.
no,
I believe that it should be
no.
the person in front of them.
It should be the broker or the lending partner that's asking these
Exactly.
questions.
That's
Not
asking these questions, not the
they're the
client.
expert. They're the
Right.
expert. But again,
Exactly.
do you think they do? The answer to that is
No,
probably not.
no, I know. It's frustrating. That's what I'm saying. That's where we'll let you go on again, but that's where we always say it's important to know who you have on your power team.
Exactly.
Yeah.
So again, taking a look at this gentleman at best could borrow 300,000. Couldn't even requalify for his mortgage with a new lender, let alone now he wants to get the maximum line of credit. So again, can you state the income? The stating the income wasn't going to work and push it to where it needed to be. And again, we could have taken this to the subprime or the B side and got this thing done, no problem.
Yeah.
But again, do we want to pay a 1 to 2% higher if we need to? No. Do we want to pay a broker or a lender fee if we need to? No. Like we want to avoid those costs.
Right.
So this is that third layer where even when some of these lending partners understand stated income, it's then taking a look, if it's not working based on stated income, what do the financial statements look like? Okay. So again, what is the net income after tax on your corporate financials? Again, if you guys are sole proprietors, this option does not work for you. Okay. But you incorporated business owners, this is an option that could work for you. This is that third layer of the onion that, again, I'm going to say most lending partners don't know, don't ask. Okay. Take a little look at the corporate financials. What does your net income after tax look like? Right. And then I know, Allister, what does net income after tax mean?
What does it mean, Geoff?
That's a great question. So your net income after tax means you take a look at your costs, take a look at your expenses, take a look at what you paid for tax, and what is the remainder left over. So guess what? Guess what this guy's net income after tax was?
What was it?
500 and some odd thousand. Okay. So keep
Okay.
in mind, he's reporting 90,000,
90,000.
but his net
That's a
income
whole lot
after
more money
tax
than
is
90,000, is it not? I don't know the
500,000.
math. Wow.
So again, you have to use a 2-year average, but let's simplify
Yeah.
this. But now all of a sudden, we can qualify his file on a 2-year average of his net income after tax. So again, one way to qualify it is on what you're reporting to Revenue Canada, which is 90 grand. The other way to qualify it is what is your net income after tax? And in this particular case, let's just say his 2-year average was 350,000. So guess what we magically were able to do?
What'd you do? How much you got him?
We got him, we refinanced his mortgage, and we got him a $353,000 line of credit.
Beauty.
And it wasn't because of what you reported to Revenue Canada, because the
Right.
answer was simply a no. We can't even get you a mortgage. We can't even
Yeah.
replace
Yeah.
this mortgage you got.
Right.
The answer by stating income was not an option because, we needed to state a lot more than what your notice of assessments would allow us to do. The
Yep.
numbers weren't going to work. In fact, no, I lied. The numbers would work, but we could only do about a $70,000 line of credit.
Right. It just wouldn't work to as well as as well as option 3 was.
Then we take a look at his net income after tax.
Right.
And then all of a sudden, we get him this $353,000 line of credit, which was very, very important to him because he wanted to use this for reinvestment purposes. Right.
Yeah.
So again, folks, this is where, and then there's a fourth option with your retained earnings, but we won't get too deep into that. But being self-employed is great, but when it comes to financing, it sucks. I was going to use
Yeah,
a
it
bad
is. No, it
word. It
really,
sucks.
really does. And that's again why it's so important that that person on your power team knows what they're doing, especially when you're self-employed. Again, when you're employed by somebody else, right? Your life is a little bit easier. Actually, it's a lot of bit easier, right? You get your taxes are done for you, like your taxes are taken off from your paycheck. You just fill out your T4, you take it to whoever you take H&R Block. You even do it on your own on Quick Tax, fill everything in, submit it, you're good, right? When it comes to being self-employed, it's a nightmare. It sucks.
Yeah.
Tax time is
So
just
it's
worse.
when it comes down to the financing, it is a nightmare. And
Yeah.
really where I want to end this, guys, is that if you or anybody in your life is self-employed and trying to get financing and hearing the word no, there are options out there. You just need to find a great lending partner that basically knows what those options are. And those options, again, can be stating the income based on gross business revenues. Those options can be taking a look at your corporate financial statements and taking a look at the net income after tax. could be taking a look at your corporate financial statements and taking a look at your retained earnings. And in this particular case, this guy went from only getting a $70,000 line of credit for his reinvestment by stating the income with a bank to getting a $353,000 line of credit by taking a look at his corporate financials and using his net income after tax. I can guarantee you, you put the same file in front of 10 brokers or lending partners, you're not going to get the final outcome that this gentleman got.
Right. Nice work, Geoff, man. Congratulations. That's awesome. And that's why, and that is why I recommend you to people, because of those types of things. It's that type of stuff that, in my opinion, sets you apart from the rest. And I don't say that to pump your tires or to do anything like that. It's straight up facts.
I appreciate that. And thank you.
Yeah.
And I
Yeah.
just, again, I wanted to share it just because I
Yeah.
know 13% of us out there are self-employed. And
Yeah.
I can guarantee you 12% of you are having a tough time getting financing based on what you're reporting to Revenue Canada and paying tax on.
That's awesome. Awesome, man. Well,
All right.
all right. Well, let's get these people going and let them go for the weekend. I just wanted to recap because, man, I feel like this was a good pod today. There was a massive amount of info. So just to wrap it up, the numbers are in. The message is clear. The future of BC real estate isn't just about the homes we build. It's about the people who build them. Training, innovation, and collaboration are the keys to ensuring we meet demand and stay ahead of the curve. We all know that it is important to have that those knowledgeable people in your back pocket as part of your power team. The November market, we are in a Christmas slowdown, right? But by that same token, if you are looking for some great opportunity areas, we've got White Rock and Abbotsford that are offering attractive entry points, especially for first-time buyers and savvy investors. Man, there's a lot going on, Geoff. There's a lot going on. This was amazing.
Just call Allister. Like,
Right? Just call
make
us,
it
man.
simple. Just make it
Yeah, make
simple.
it simple. Just call us. But thank you all for listening to us. We always encourage you to love us, like us, download us, share us, tell the world about us. We appreciate you guys listening. We appreciate your guys' comments. We always try to get better for you each and every pod. I got a nice reach out. I got a nice shout out from a lady a couple days ago. Really, she reached out, just a nice comment saying, keep doing what you guys do. You guys are doing great. So we truly appreciate the encouragement. We're always doing our best for you. So, Geoff, until next time, stay informed, stay empowered, and most importantly,
Stay in tune.
stay tuned. That's right, Geoff. All right, people. We'll talk to you next Wednesday. We promise not to. Oh, wait, Geoff, are you with us next Wednesday? Because I heard somebody's going on a cruise. So I think we might be putting this on pause for the next 2 weeks.
We might be in a holiday season, but you know what? We might be able to do it on the cruise ship. I don't know, but let's for now, let's not overpromise and underdeliver.
All
Let's just
right.
say we're gonna take a Christmas hiatus.
We might be at you. We might be back with you with another holiday, with a holiday episode. My mom actually gets in next week, so I am very happy to have Mama C in BC with the family to enjoy a little bit of the holidays with us. So yeah, so if we do not get a chance to speak with you guys before the holidays, we wish all of you an amazing Christmas, all of you an amazing holidays. We have loved the fact that you have been with us for an entire year now. So that's, if we don't get a chance to talk to you for before the holidays, I hope you guys all have a very amazing and enjoyable one, because Christmas is my favorite time of the year. Have a wonderful holidays. Peace out to all of you, and we will talk later. Bye
All
now.
right. Well, have a nice day. Get your Christmas shopping done.
Right? Bye, guys.